In this video, I'm going to show you how to find and analyze deals on Roofstock.com. I'll share with you not only the features of the platform, but also the methodology that I use to find profitable properties, and tips on how you can go even deeper in your analysis to help you negotiate the best price and avoid making a bad deal. All that and more, coming up. If we're just meeting, my name is Vitaly Volpov. I'm a practicing attorney, an active real estate investor, and a part owner of a real estate brokerage in upstate New York. I've been successfully investing in cash flowing rental properties since 2011, and I currently have just under 80 rental units in my real estate portfolio. On this channel, I discuss relevant legal concepts as well as best strategies and tips for real estate investing and personal finance. If you're new to the channel, consider subscribing and hitting the notification bell so that YouTube notifies you of all my future content. If you enjoy the content in this video, hit the like button and comment down below. Before we get into the topic of this video, I do want to mention that I have an affiliate relationship with Roofstock.com, and I do have an affiliate link to set up an account with Roofstock in the description of this video. You guys don't have to use it, but if you do decide to set up an account, I would really appreciate it if you use my link. As you guys might know, these videos do take a really long time to create, and I go into significant detail in these videos, so it would really help me out, and I would really appreciate it if you did use my link. Additionally, if you haven't checked out my first video giving a broad overview of Roofstock.com, I'll link it in the description below, and I'll also put it in the YouTube card above. And as I mentioned in that video, I think that Roofstock is best for those investors who do have some capital to invest, but who do not want to actively manage their rental properties and would rather use property management, and also those investors who are looking to invest outside of their local area and outside of their state. So before I talk about the different features that are available for analysis on the Roofstock's website, I think it's important to talk about my methodology and what you should be considering, even if you don't have the same methodology as me, but what you should be considering before you dive into your search. So one of the first considerations is, are you looking for cash flow or are you looking for appreciation? And those two things don't always go hand in hand. In fact, most of the time, the properties that will appreciate the most will have the least amount of cash flow, and vice versa. Personally, I try to lean more toward cash flow versus appreciation because I don't like counting on appreciation to carry the day for me when it comes to my investments. But I think a good approach is to look for a hybrid of maybe trying to get a little bit of cash flow that's maybe above average, and maybe a return in appreciation that's average or slightly above average. And I think that would be a good result for me if I could find a deal like that, if I'm looking on Roofstock.com, and I would suggest that that is a good approach for you to take as well. Obviously, you need to do what is right for you in your investing criteria, but that would be my approach. The next thing is to consider whether or not you're looking for single-family properties or multifamily properties for your investing portfolio. And when it comes to Roofstock, it is a lot more geared towards single-family properties versus multifamily properties. At the time I created this PowerPoint, there were 926 properties that were single-family properties on the site, and there were only 94 properties on the site that were multifamily properties. So it's an almost 9-to-1 ratio of single-family to multifamily properties. So if you're looking for a large selection of multifamily properties, you're probably not going to find it on Roofstock. However, even 94 properties is not an insignificant number, especially if you don't have a specific set geographic area that you're trying to target. And if you're flexible as to where you might be buying your properties, you might be able to find a good deal in the multifamily properties on Roofstock as well. The next thing that I want to mention to you before we dive into the analysis on the actual site are some of the important metrics that you will see that maybe you're not familiar with if you haven't been to the site before. The first one is gross percentage yield, and that is simply the annual income generated by an asset before any expenses, divided by its purchase price. So monthly rent times 12 months divided by the purchase price. And when you see the gross yield on the listings, it is essentially taking the gross rent that the property is producing and dividing it by the asking price. Since we're talking about listings and not sold properties on Roofstock.com, and that's the point of this video, we are talking about the asking prices. Of course, you don't have to offer the asking price, and in many cases, you probably shouldn't be offering the asking price on the property, and so the gross yield will tend to go up as you go down in your offering price. but that's what gross yield means, and I actually like to search using gross yield as one of my main criteria, as I will show you in a minute. The next important metric is cap rate, and that is the percentage return calculated by dividing net operating income in year one by the property's purchase price. This does not include financing. Now again, we're actually not using a purchase price, we're using the asking price, but that is how they get to the cap rate that is listed in the listings. The next one is neighborhood rating. And Roofstock has its own proprietary system for rating neighborhoods' desirability, which includes school district quality, home values, employment rates, income levels, and so forth. The next one is select versus exclusive listings. And you will see that there are these labels that appear on their properties listings, and I want to point them out so that you know what they mean. So a select listing is something that is available to the public on the local MLS in addition to the Roofstock's website. So it's not limited to the Roofstock's website. However, exclusive listing is only available and offered through roofstock.com. And as of the date of making this video, there were currently 619 such listings on the site. And this is important for reducing the amount of competition that you're going up against as you're trying to hunt for a good property to buy. And so I would suggest that you consider looking at exclusive listings before you look at select listings on the Roofstock's website, because you might be able to find a better deal or be able to negotiate a better price since there's less competition. The next important metric that I want to highlight is inspection contingency listing. This means that the home will be inspected after the offer is accepted and prior to closing. The buyer will be able to negotiate price or repairs based on that inspection. And so there are these notations on the listings that will show up which say inspection contingency, and that just means that you will have another opportunity to renegotiate the price, and you'll also have an opportunity to do a full thorough inspection of the property. And if there are things that you don't like or there are major issues that come up, you can certainly back out, get your money back, and be done and on to another property. The next important metric is the certified listing label. And so you will see that there are some properties on the Roofstock's website that have the certified label on them. There aren't a lot of them because, again, Roofstock is very selective with the properties that it picks, but those that do have that label will have many, many pages worth of detailed inspection documents, and so you will have a significant amount of information to help you decide of whether or not you want to make an offer on this property or not before you go and make that offer. And the other thing that I should mention is that those certified properties are eligible for something called a 30-day money-back guarantee. And this is something that is very unique to Roofstock and essentially means that if you buy this property and you are unsatisfied with it for whatever reason, within 30 days of you closing on this property, you can request a refund from Roofstock. And the way that would work is that Roofstock would put that property back on the market and attempt to sell it for you within a certain period of time. And if it does sell it, you would just get the money that you paid to you. And if it's not able to sell the property on the market, Roofstock will purchase it back from you for the amount that you paid for it. The final metric that I'll mention is something called a Lease Up Guarantee. And this is a guarantee on certain vacant listings that says that a buyer will be able to get a tenant within 45 days of closing, or Roofstock will cover rent for up to a full year. Now, this is not something that is available on all vacant properties, but you will see this label which says guaranteed with a little shield symbol on those that are eligible for this guarantee. All right, so let's now look at the Roofstock's website and get familiarized with the different features and options that you have for searching for properties on this platform. So when you first open the website, you're going to be on their homepage, and what you're going to want to do if you're looking for properties is go to the Buy section. So you click on Buy, and then you click on Properties, and it will take you to this area. So right now it's showing that there are 1,004 properties currently available, and that includes all different types of properties that I mentioned earlier. This is multifamily properties, single family properties, and there are also some unspecified properties here as well. And so up here you will see a few different criteria. So we got all is selected right now, so that's why we got 1,004 properties showing. And then we have newly listed, 2 to 4 units, higher yield, 1%, best schools, and price reduced. So all those are basically shortcuts for trying to find something that may be a good deal. I will go through them quickly for you guys, and then I'll talk to you about which ones I like looking at and what I'd like to use. But let's just say we wanted to click on newly listed, and so we click on that, and that takes us to 146 properties. So it takes us down to 146. And you will see here, each of them is kind of listed in a snapshot. You have a photo, cover photo, price, address, bedrooms, bathrooms, square footage, and then we have all the labels that I mentioned in the earlier part of this video. So for example, this property right here in Indiana on Tennessee Street is an exclusive listing. So this is only available on the Roofstock's platform. You can also see that it has the inspection contingency. So an inspection hasn't been done on this property yet, but you will have the opportunity to do an inspection. So you can also see that the neighborhood rating here is 3 out of 5 stars. Its cap rate is 6.7%, and its gross yield is 11.6%. So that is what it looks like when you click on newly listed. Now let's see what happens if we click on 2 to 4 units. So 2 to 4 units, we've got 94 properties under this category. And on each one of those, there are labels that show you how many units are in each property. So we got fourplexes, we got a duplex, we got a triplex, and so forth. And most of them are going to be duplexes, triplexes, or fourplexes, although I did see some before that were larger, that were more apartment buildings, 5 units and larger, but those are pretty rare. So let's go back up and click on higher yield. And the way that Roofstock defines higher yield is basically any properties that have a gross yield of 11% or higher. And remember, that is the gross rents that the property brings in divided by its asking price. So anything that's 11% or higher is going to show up in this category. And there are quite a few properties here. There are 334, which is cool. And obviously, gross yield isn't going to be the only criteria that you search by, but it is good to know that you do have that option with this shortcut. The next one is the 1% rule, which is, as it describes here, properties where the monthly rent is at least 1% of the list price. And this is just another way to look at the relationship between the list price and the gross rents that it brings in. Next, we have best schools option, and if we click on that, we see that there are currently 91 properties that fit this criteria. And as Roofstock explains, best schools filter shows homes where the assigned schools all have a score of 5 or higher, and at least one of the elementary, middle, and high schools has a score of 8 or higher. And the other thing that's interesting about that is as you scroll through and look through the properties that come up under this criteria, you can see that the neighborhood rating has gone up substantially. There are even some 5-star rated neighborhoods, 4.5 stars, 5 stars, 4 stars, 4 stars. There aren't too many average or below average neighborhoods. Like this one right here, neighborhood rating is 3 stars. But for the most part, if you're going to be looking in good school districts, you're going to be getting good neighborhood ratings. And with that, you're also likely going to be looking at much lower yielding properties, because you can see the gross yields on a lot of these are below 10%. And these are primarily appreciation plays versus cash flow plays. And that is, again, something that you need to decide for yourself in whether or not that is important to you or if cash flow is more important to you. Finally, the category of price reduced provides us with 82 properties. And these are just properties that have been on the market for a bit and have not received any good offers that have been accepted. And so potentially these are motivated or maybe more motivated sellers than the ones that are in the newly listed category. So we can see some pretty significant price reductions with some of these. So this one has been reduced by $10,000. This one has been reduced by $22,600. And there are some smaller reductions here as well. It's just a nice way to potentially find some more motivated sellers that may be more willing to accept a lower price and that may be ready to sell at a realistic number. All right, so now that I've shown you some of the shortcut filters, let's look at some of the more detailed criteria that you can select in order to narrow down your search results even further. So if we go and click on the More drop-down menu, you will see some of the same criteria that were in the shortcuts, plus a bunch of other criteria as well. So like I said, I like to look at the gross yield, and so I can go ahead and bump that up to 11 plus, so 11+% on gross yield. And then I'm going to scroll down to listing source and select Roofstock exclusive. and click apply. And then the other thing I'm going to change here as well is the neighborhood rating. So I'm going to go with the neighborhood rating from 2 to 5 stars. Again, I want to get to a point where I'm going to get a reasonable cash-on-cash return and also have a reasonable chance of the property appreciating over time. So in order to have a chance to have good cash-on-cash return, I'm looking for higher yields. And in order to get a reasonable chance of appreciation, I'm looking for neighborhoods of at least 2 stars and preferably 3 stars or above. So with those criteria selected, let's see what kind of results we get. All right, so we get 167 results, and if we wanted to narrow them down further, we can do some other modifications here, like maybe the listing price, if you have a certain price point in mind, or maybe a location if you have a specific location that you're interested in. For example, maybe you want to be in Texas. Let's see what we get if we select Texas. Okay, and with that, we got 3 properties that fit the criteria that we requested in Texas. So that's how you do the general search criteria. The next thing I want to show you is how to do a deep dive analysis on individual properties. And the first property that I selected to show you guys is this property in Springfield, Illinois. It is a single family property with 2 bedrooms, 1 bathroom, 1,000 square feet, and it was built in 1950. So the first thing that you see on this property page when you get to it are the pictures on the left. And here we only have a few pictures to look at. You can see that it has a very nice looking kitchen with stainless steel appliances. It has a nice finished hardwood floor, and the front of the house looks pretty nice. Now, we don't have a lot of other pictures. We don't have any bedroom pictures. We don't have any bathroom pictures or pictures of the backyard. But from what we can see so far, it looks pretty good. The next thing you'll notice is the property's asking price is $97,500. And below that, we have some analysis and assumptions at first glance. So let's just look at that first, and then I'll show you guys some other criteria, and we'll play around with some of these numbers, and I'll explain what some of them are. So the first thing that we have here is the purchase price slider, right? So this actually determines the other numbers and calculations. So right now at $97,500, you get these numbers right here in terms of the results for each one of these categories. But if you were to move this number up or down, those numbers will all change. So I'm just gonna go ahead and bring it back to the original. And at its current asking price, the 5-year return, according to the assumptions that are currently in this listing, the 5-year return on this would be $16,196. And this is with a 20% down payment on a purchase price of $97,500. This also includes the current rent, which is at $1,000, and you can see the tab is selected current. And it also includes an appreciation of 2%. And this is based on a 10-year historical average for the area. Any of these things that we change will change the ultimate numbers. It will change the ultimate return, and it will also change the various percentages here as well. So right now, as things stand, this is an annualized return of 12.4%. Cap rate is coming out to be 6.3%. Gross yield is at 12.3%, and cash flow is $567 per year. Now, if we were to change some of these numbers just arbitrarily, let's just say we decided to go with a historical 5-year appreciation rate. Let's see what that does. So that changes it to 3.4%. So apparently for this area, the appreciation rate has been at 3.4% over the last 5 years. And if we were to change the appreciation rate further to just the last year, that bumps it up all the way to 13%. And you can see how the total return has increased significantly from when the appreciation was at 2% with a historical 10-year average to the 1-year historical average of 13%. So $16,196 return after 5 years to a whopping $85,300 return after 5 years. All from changing appreciation. Now, if you know anything about real estate and what's been going on in the market, in your market locally and as well as across the United States, you know that appreciation has been going crazy. Properties have been appreciating at an incredible rate, and I really don't think that this is sustainable, and I don't think they will continue to do that for the next 5 years. So since what we are looking at here is a 5-year return, I don't think that it's reasonable to assume that appreciation will stay at 13%, even if it had been 13% for the prior year. So I think it's a lot more reasonable to maybe use the 5-year appreciation rate or possibly even the 10-year appreciation rate. And I'd be more inclined to go with a longer time period versus the shorter time period. So if that's the case, then our total return, if this was the purchase price, is $16,196 after 5 years. So if you were to own this property for 5 years and then sell it after 5 years, this is what you can reasonably expect to get. Now, if you hover over this little information icon, you can actually see a better breakdown of these numbers. So let's see. So it says total investment, right? This is the initial down payment plus closing costs at the time of purchase, which is $21,743. Cumulative net cash flow, that's what these abbreviations stand for, would come to $4,392, so not very much at all for 5-year return. And then the sale proceeds would be $33,546. So the initial investment is subtracted from the sum of these two other numbers, and that's how we get to $16,196. Now, let's assume that instead of owning this property for 5 years, you actually hold on to it for 10 years. Let's see what that does to our profits and return at the end. So the profit comes up to $50,524. Again, we're keeping all the other assumptions the same. And let's say we owned it for 30 years. You can reasonably expect a return of $301,727. Now, this is just the beginning of our analysis. There are quite a few other things to look at to verify these numbers and potentially change these numbers. So the first thing I want to point out about what we could possibly change and what you should be verifying and confirming is the amount of monthly rent. So right now, the current monthly rent is at $1,000. But you also have a selection here for estimated market rent. And this is an estimate that is derived from Roofstock's own research and communications with local property managers. And it may be different than the actual current rent that this property is currently getting. It may be higher or it may be lower. So let's just see what Roofstock has as the estimated market rent. Okay, and when we click on that, the estimated market rent actually goes down by $50 per month. So current rent is $1,000. Estimated market rent is $50 lower. And okay, I mean, that's kind of interesting. So it makes you wonder. It's not a huge difference, but makes you question as to how the current owner is getting $1,000 per month on this rental if the estimated market rent is supposed to be lower than that. So, okay, fine. So just put that in the back of your mind and let's park it there for a minute and let's see what other numbers, other criteria that we have. So if you scroll down on the property listing page, you will see that there is a short summary here. And let's see what the summary can tell us. So number one, the occupancy of this property is occupied. So there is a tenant in the property, which we would expect since there is a current rent amount listed. The lot size is 5,590 square feet. The current lease start date, so this current tenant that's in the property started renting this property on May 1st, 2021. Okay, so the lease ends a year after that, which will be May 1st, 2022. There is no HOA and the flood risk is minimal, so you won't have any flood insurance concerns. So that's good. The summary here is that it's an attractive cap rate, which we'll take a look at the cap rate in a second when we go to financials and analysis tabs. But it says that it's conveniently located in the heart of budding Springfield community, okay? And it has some recent improvements, which includes a new kitchen, which we saw in the photos, stainless steel appliances, updated bathroom, which we haven't seen because there wasn't a photo for that, refinished hardwood floors, fresh paint, furnace, and water heater. Okay, that sounds good. Newer roof, siding, and energy efficient windows. Okay. All right, so that's good to know. Now let's look at the neighborhood. So the neighborhood is a 3-star neighborhood, which, as I mentioned to you, is something that I would like to see. 3 stars is good. It's certainly better than 2 stars, which would be my low end. So, okay. And then the schools don't seem to be that great. Seems like the schools are 1.5 stars, and we can actually expand that. If I click on this, it'll actually show you what schools are in the area. And you can see there's ratings for the school. So there's an elementary school, 4 out of 10. There's a middle school, 2 out of 10, not that great. And there is a high school, which is 3 out of 10. There is, it looks like, another elementary school that has a much higher rating, but it's not clear whether or not this property is located within that school's geographic area. And if we keep scrolling, we get to this buy process section. And under property characteristics, you'll see that there's an inspection contingency, which I mentioned before, which means that you will have an opportunity to professionally inspect the property and renegotiate the price or back out if you don't like what you find. And the other part of this, which I already mentioned as well, is that this listing is a Roofstock exclusive. All right, so let's go back up top and let's select financials. And this is where we get into more of the numbers. So we got the gross yield, we got the cap rate, and honestly, I'm not spending a whole lot of time on the cap rate here because I don't think it's extremely critical in the way that I am looking to analyze these properties. The information that's included in the cap rate heavily depends on what information we put in terms of expenses and income from the property. And since I haven't gone through the entire analysis, I'm not really putting a ton of stock into what this says right now. But the thing that I do care about is the cash on cash return. And again, this will also change as we make our changes. All right, so let's keep scrolling down. So we have our total initial investment, right? This is the closing costs together with the down payment plus loan fees. And we have the purchase price right now, $97,500. The down payment is at 20%. The loan interest rate is estimated at 4%. You might want to change it depending on when you're watching this and where the loan rates are. I think 4% is probably achievable right now at the time I'm making this video, so I'm just going to leave that alone. Closing costs, I don't know the specific closing costs that will be involved, and this is something that you may want to adjust later, but it's not going to make a huge difference for our purposes, so I'm just going to leave that alone as well. And so let's keep scrolling down, and we have an interesting little chart here, which is investment value over time. But the thing that I want to focus on is this tab, cash flow. So if you click on that, this actually breaks down some of the expenses that are used in the assumptions in more detail. So we have property taxes, repairs and maintenance reserves, other expenses, net operating income, capital expenditures, and then we have the total unlevered cash flow. This is if you were to buy this property, 100% for cash, and then we have the loan payment subtracted from it. And right now, that's how we get to $567 as your annual cash flow profit. This is in year one. So I want to look and see if these assumptions make sense based on my own estimations and my experience investing in rental properties. So you can click on Edit Assumptions, and that opens up this new window here, and we can make some changes. So let's start at the top. So we have the rent. We said that Roofstock estimates the rent to be a little too high. So if we change this number from $1,000 per month to $950 per month, what would that do to our return? So let's do that. Let's multiply 950 by 12 and we get 11,400. So I'm going to go ahead and change that to 11,400. Estimated vacancy here is estimated at 5%. I think that's reasonable, so I'm going to leave that alone. Property taxes. So property taxes are listed as $1,900. Now, we need to confirm this, and I don't know where this number is coming from right now. So the way I would confirm this, and I'm just going to leave everything else alone, and I'm going to close this out. It does change the numbers because we changed the monthly rent. And I want to go and show you guys in analysis, we have some due diligence documents. And one of those documents is called the title report. You click on that, you open that up, and just make it bigger so you guys can see. This is actually a pretty neat little report that gives us a whole lot of information about many different things. But one of the things, and the reason I'm showing you this right now, is it includes property taxes. So right here it says that the property tax on this property for the tax year 2020 is $1,568.94. And I actually went and verified this independently by searching for Springfield, Illinois property taxes on Google. And so I click on the results page, and then we're gonna go ahead and search for the parcel. We're gonna search for this property. We have information on the ownership of this property because it's in this title report. And the owner is, I don't know how to pronounce it exactly, but Sichi and Company LLC. Just grab that, copy it, put that in the owner name. Here we go. Then we got the house number, and the street name is Holmes Avenue. So I'm going to go ahead and type that in, and we're going to change the city because that's not correct. We're in Springfield, and I'm going to click submit. And here's the property. So let's take a look at billing history. So in here you can see the 2020 property taxes, and we can confirm that $1,568.94 was the billed property tax amount for this property. So that's good. We confirmed the information that is provided to us in the title report. And the other thing I tried to find, but I couldn't, is whether or not this property has school taxes that it has to pay as well. I couldn't find it by searching for it. It's not in the title report either. So it's possible that in this area in Springfield, Illinois, school taxes are included in the property tax, but it's also possible that school taxes are a separate tax bill that is not listed here and is hard to find online. So the best thing to do in such a case where you can't tell is to actually call the local assessor or the treasurer's office and find out if that's actually the case. So I would do that before I place an offer on the property if that matters to you. So I'm going to come back to this title report because there is some more important information that I want to highlight in it that will help our analysis. But for now, let's just go back to the financials and the cash flow calculation that we were working on. I'm going to change the taxes to $1,568.94 because that's what we were able to verify. And the next thing I'm going to look at is property management expense, and 10% sounds pretty reasonable to me, so I'm going to leave that alone. The next thing here is leasing fees, which is currently shown as a percentage of the purchase price. I like to look at the dollar amount, and so $498, if we're assuming that rents are somewhere around $950 or $1,000, and you're paying your property management company to release the property after the current tenant moves out, I think half of a month's rent is probably the lowest you're going to see. And it's possible also that there may be multiple years that the tenant that your property manager finds for you stays in your property so that there aren't additional expenses incurred in terms of re-up fees and lease-up fees. So maybe $500, $498 is reasonable. So I'm just going to go ahead and leave that in here as our assumption. HOA fees, there aren't any HOA fees. It doesn't belong to an HOA. Insurance is estimated by Roofstock as $544 per month. Now, I don't know enough about the property or enough about the insurance in the area where the property is located, so I'm not going to mess with this number, but this is something that you should find some brokers or insurance companies that you can call and get some quotes on this property from before you make your offer, because I think you don't want to just rely on an assumption. Now, Roofstock does provide some referrals to insurance agents. I'm not sure if there is one for this area that Roofstock can provide you with, but if they can't, you can definitely find your own simply by searching on Google and finding a local insurance agent. The next thing here is repairs and maintenance, and it is estimated at 10%. Again, I think that's reasonable. Maybe it's a little bit high since this property appears to have been fully remodeled and likely won't see too much of a need for repairs. But just to be on the conservative side, I think 10% is very reasonable and something that I usually use as my estimate as well. Now, by the way, when I say 10%, this is 10% of the monthly rental amount. All right, so that means that our total operating expenses on this property come to $4,777. And that means that the net operating income is $6,053. And this is basically taking the gross rental income, subtracting the expenses from it, and that's when you get the net operating income. The next category of expenses here is something called the capital expenditures reserve, which is essentially money you will set aside for improvements or replacements that you need to make at the property. Things like a roof, appliances, hot water tank, furnace, things of that nature. And this is just money you should be setting aside every month and accounting for, because those expenses will come up eventually and you will need to spend the money to make them. So with that said, our total net cash flow after your mortgage expense comes to $501. So I'm going to go ahead and click apply, and let's take a look at what this does for our total numbers here. So it didn't do a whole lot for our cash on cash return. It is still pretty horrible at 2.3%. Cap rate is at 6.2%, which is also not that great. If you're a buyer, you want the cap rate to be higher. And if you're a seller, you want the cap rate to be lower. It just means that you're paying less for the cash that it brings in. If you're a buyer, if it's a higher cap rate, in this case, 6.2%, is not that high. It's not that great, but I'm mainly concerned with the cash on cash return, since this is going to be a passive investment for me. Can I invest my money somewhere else and get a better return? And I think I probably could. At 2.3% is not that much money. Even putting it in the stock market, even it being as volatile as it is, I'm not sure I'm super happy with a cash on cash return of 2.3%. Now, the annual return is at 12.1%, which is certainly not bad after 5 years if that's what actually happens. But you cannot really count on the majority of your profit from this property or any property coming from appreciation. At least that's not how I like to invest. I like to get an annual return on my money and know that my money is working for me every year, and not just wait and hope for a good profit at the time that I sell the property. Again, this is just how I invest in real estate. But let's come back to some of the assumptions that we were making, and I want to show you guys some more information in that title report. So let's go back to the rent. So we're going right now with the estimated market rent. This is $950, and that's an estimate provided by Roofstock. One thing I think you should be doing, if there is any doubt or question in your mind about the rent's estimates or the current rent that's listed as the actual rent, is by trying to verify what is reasonable for the market where the property is located outside of Roofstock and outside of this particular platform. And one of the ways I like to do that is by going to a site called Rentometer. And if you go to that site and you plug in the address, the rent, the bedrooms, and the bathrooms, what you see is that the average rent for this area, for this size property, is actually $712. And this is based on 20 recent listings of 2-bedroom, 1-bath rentals in the area in the last 12 months within a 1.5 mile radius. And so if it's close, then it's probably okay and it's not that big of a deal. But to me, the difference between the current rent being $1,000 per month and this average rent that I'm seeing here is a little bit concerning. That is a pretty significant difference of several $100s, and it will impact your cash flow in a very significant way if this is actually true. If there's something about the current tenant that is unique or that cannot be replicated after they move out, and you'll have to significantly drop your rent, well, that will significantly impact whether or not this deal is going to be profitable or not. So if we go back to our assumptions, and if we were to change the rent in the financials to $712 per month, so that means that it would be only $8,544 as a starting point for gross rent, then our numbers end up being quite negative. We're looking at a negative net cash flow of $1,398. Now, it's possible that these listings in Rentometer are for apartments, and it's possible that houses like this go for a premium. So if that's true, and that may very well be true, maybe the calculation should be a little bit higher. Maybe $900 or $850 per month in rent is more reasonable. So let's just say it was $850. How does that change our results? Well, the results do change, but it's still a negative $390 cash flow. And so this would be a pretty big problem for me in wanting to pay anywhere near the amount that's being asked. So if we go back up top, and remember I mentioned in the beginning that you can certainly offer less than the asking price. So right now the asking price is $97,500, but you probably should offer less than the asking price. But how much less should you offer, and how do you determine that? Well, this is where I think we should go back to the title report that we have access to. So if we go back to the title report, you will actually see that there's a value range that is provided to us, and that is $53,713 up to $77,030. Significantly less than the $97,500 that the seller is asking for. And we can actually see how this plays out in the recent sales of this property. So if we scroll down, we can see that the current owner bought this property on April 9th, 2021. And the price which this owner paid for this property was $72,000. And if we keep scrolling, we can actually see some of the historical listing information. So we can see that this property was originally listed for sale in May of 2019 for $65,000. Then it went off the market, then it was relisted, went back off the market and was relisted again. And finally, this property sold prior to this current owner buying the property in January of 2020 for $32,000. At the time, it was listed for $65,000 and it sold for $32,000. Subsequent to that, just 10 months later, the prior owner listed this property back on the market for $85,000. And it is my belief that the property was remodeled by the prior owner who purchased it for $32,000 and essentially flipped it. So after that owner listed it for sale, it sat on the market for a bit. It looked like it went under contract. Then it was canceled. Then it finally sold to our current seller who paid $72,000 for it. So the question that I would have in this case is what happened between the time that this seller bought the property in April of 2021 and today that would warrant a price increase of over $25,000. It does not look to me like this current owner actually did anything to improve this property and that the improvements occurred prior to them purchasing it. And one of the reasons that I think that is because the current tenant began their tenancy on May 1st, 2021. It's not possible for the current owner to have done any renovations between the time that they purchased the property on April 9th and May 1st that would increase the value of this property by $25,000. So at the end of the day, I think that this owner is either looking to test the market and try to get a quick cash out, or there's some other reason why they don't want to be a landlord anymore and they simply want to sell. In either case, I don't think this property is worth anywhere near the asking price based on everything that we know about it. And if I were to make an offer on this property, I probably would be offering either close to what this current seller paid for it or maybe slightly above. And if we were to adjust the offer price to say $80,000, just for illustration purposes, let's just see what that does to our returns and our profits. So if we do that, the 5-year estimated return on this property would be somewhere around $13,000. And again, that would include monthly rent of $850 and appreciation of just 2%. And if those are our assumptions, the cash on cash return is still pretty abysmal despite the reduction, and it simply wouldn't be a deal for me even if we offered $72,000, which is exactly what this current owner paid for it. I still don't think the numbers justify and make sense on this property. And that's probably why this current seller is selling. All right, so now that we looked at one property that I don't think would fit my investing criteria, let's take a look at another property, this one also in Illinois, that I think might do a little bit better. So this one is located in Country Club Hills, Illinois, and it's 2403 Provincetown Drive. This is actually a townhome. So the asking price is $132,000. And its current monthly rent is $1,899. So for appreciation, I'm going to go ahead and do the same thing that I did with the other property, which is to use the 10-year historical average appreciation, which actually increases it from 4.1% to 5.6%, which definitely helps our numbers. And let's take a look at what other information we have available on this property. So on the summary page, we can see that this is an occupied property, that the current tenant moved into this property on September 1st, 2020, and that their current lease is expiring on January 31st, 2022. The lot size for this property is 1,408 square feet. The HOA fee is $165 per month, and this property is also not in a flood zone. The thing that I want to point out in the summary here is that this is a 3-bedroom, 2.5-bath townhome. Also, what I like about it is that its neighborhood rating is pretty high at 4 out of 5 stars, and the school rating is not that great, could be better, but I guess it's not too terrible, especially given the neighborhood rating being so high. And also, let's take a quick look at what photos we have available to us. I'm just going to scroll through them here. Looks like the outside is very well taken care of. I assume the homeowners association takes care of that. And it doesn't look like we have any photos of the inside here. So let's keep it going and see what other information we can find out. Under property characteristics, this is a Roofstock exclusive property. So again, same thing. You're not competing against the masses. This property is not on the MLS, which is a good thing. And let's go and look at the financials. So with the current assumptions, we can see that the cap rate is at 7.2%. The cash on cash return is at 8.2%, and the annual return is 26.8% over the course of 5 years. So if we go back up top, we could see that the total 5-year return is $57,476, assuming these numbers are correct. And let's take a look at what the estimated market rent for this property is according to Roofstock. And it looks like it's actually quite a bit higher. So $2,167 is what Roofstock estimates you should be able to rent this property for. And if this type of rent is something that you are able to get, then your cash-on-cash return and your overall annual return would go up significantly. As you can see here with that estimated market rent, the cash-on-cash return would jump up to 15.7%, and the total annual return over the course of 5 years would jump up to 32.7%. And those are some pretty good numbers. And again, I want to make sure that this estimated market rent number is valid, and so I'm going to go ahead and plug this information into Rentometer and see what we get. So I went ahead, typed in the address, put in the current rent amount of $1,899, put in the number of bedrooms, and included 1.5 or more bathroom selection, which is the maximum that I can put in on the free version of Rentometer. And what it says is that the average rent for this area, for this type of property, is $1,811. And so we're certainly within the range of reasonable prices. And if I put in $2,167, which is Roofstock's estimate, and click Analyze, we're still within the reasonable range, although we are starting to approach the high end. It's still not off the charts like the other property was, where you can see it completely off the charts, not even close to anything that is realistic. And so I think this is also very good news for this property, and looks like there's some potential to increase the rents and realize a much higher rate of return. So let's scroll down and look at the cash flow calculations and assumptions. So right now it's showing us the estimated market rent of $2,167 per month, which comes to $26,004 per year. I'm going to leave it at that for now, and let's look at the other numbers. So the estimated vacancy is 5%. I think that's fine. Property taxes, again, you want to verify this, and so we need to make sure that this is actually correct. So if we look at the title report, we can see that the property taxes reported for year 2020 were $4,608.27. So I'm going to come back here and put 4,600 to make that a little bit more accurate. And I'm going to change the property management number to 10%. Leasing fees listed at 5%. That comes to $1,235. About half of what the estimated market rent would be, so I'm just going to leave that. HOA fees, I'm going to leave that as well. I believe we have them listed at $165, so $165 per month times 12 should come to the number that they have here. Yep. Insurance, again, this is something that I'm not 100% sure about. It sounds reasonable for a relatively small townhome, but it's possible that it would be a little bit higher than that. I'm just going to leave it at $732, but check with your insurance broker on that. Repairs and maintenance, 10%. That's my standard, so that's what I would leave in there as well. And I think I probably would change this to 10% and see what we get. All right, I think that's going to decrease our numbers somewhat, but let's apply and see where we end up. Okay, so that dropped our cash-on-cash return to 9.2%. I think that's pretty realistic and maybe even on the more conservative side, which is fine because we are trying to get the best deal possible and be more cautious on the downside of things rather than overestimating our profits. Now let's go back and look at the title report, and let's also look at the inspection report because there is an inspection that comes with this property. So let's first look at the title report, see if there's any information we can learn from it besides the tax information. So a couple of things that we can learn right from the get-go is that this current owner purchased this property for $75,000 in July of 2020. Now, it's not clear to me whether they did any renovations to the property. It's possible that they did. This may be another flip of sorts, but it looks like they bought it for a pretty good price a little less than a year and a half ago. If you keep scrolling down to the bottom, you will see some information about this property being listed and sold on the market. And here's something interesting. It looks like this property was under contract as of July 21st, 2021. And at the time, its listing price was $119,900. To me, that suggests that there's probably some room to come down off the current price. And obviously, we also want to make sure that the property is not still under contract and that there's another buyer who is in the process of buying it. I wouldn't think that that would be the case since it is on Roofstock Marketplace now, but certainly something to be checked in the due diligence process. So now let's look at the inspection report. And we have quite a few pages of inspection documents here. And so let's just scroll through it a little bit and see what information we can learn from that. So here we have a summary page which shows us that there are some potential repairs that may need to be made. There's some issues with the roof, it looks like, bathrooms, some issues there, and there are some potential repairs needed in the attic as well. So it looks like there are several shingles missing off the roof, and they may need to be replaced, or the entire roof possibly may need to be replaced. This says that one vanity drawer is missing or damaged, which is an extremely trivial thing to point out. So to me, that's nothing. The roof is a little bit more of a concern, but I actually saw somewhere in this listing that the HOA actually does repair the roof, and they are responsible for that expense in any case. So probably not something that you need to worry about with this particular property. There is a reference to some issues apparently in the attic where it appears that some areas have been primed or painted, and it is recommended to ask the seller why that was done. I assume that because the bathroom exhaust vent terminates in the attic and is not exhausted or vented to the outside, there was probably some mold that was growing in the attic. This is a common issue in my area. I see that all the time. Again, it's not that big of a deal, even if you had to remediate the mold inside the attic. And I looked at the photos. They don't look to me too terrible. There may have been some kind of mold or some issue there that they either spray painted, or maybe they spray painted kills on it, or maybe they bleached it. In any case, it is something that can be remedied fairly easily and relatively inexpensively. It does not look like an attic that has terrible mold problems, at least from the pictures that I am seeing here. And it's useful that there are quite a few pictures in these inspection reports that Roofstock provides. You can actually get a good sense of what the property looks like inside and outside. And this property looks to be in pretty reasonably good shape. There are some issues with roof shingles, like I said, but I believe that the HOA is going to be taking care of it. The inside of the living room and the kitchen looks to be in good shape. It is a little bit dated. You can see that there's a white microwave there and a stainless steel stove, and the flooring looks dated, and so do the cabinets and the refrigerator. Overall, the property looks to be in pretty reasonably good shape. It is making $1,899 per month in its current condition, so I think if you spent $5,000 to $10,000 sprucing it up after the current tenants move out, you probably could get a lot more in rent for this property. But since we know that the current owner was at the very worst able and willing to sell the property for $119,000, since that title report shows us that it was under contract when it was listed for that price, I certainly would not offer the full asking price for it. I probably would go a little bit lower, and a good place to start would probably be $119,000 or maybe even less. So maybe you want to offer $115,000 on this property, and that would certainly improve the numbers once again. So if you were to offer $115,000, and if the owner was to accept $115,000, the cash-on-cash return goes back up to 13.6%, which is certainly good. And the annual overall return, if you factor in appreciation over 5 years, would rise to 31%. So all in all, I think this would make a pretty reasonably good deal for somebody who's looking to invest out of state and have property management take care of all the issues and simply have a passive investment in a rental property. If you were to offer $115,000 and the owner was to accept, your upfront cost would come to somewhere around $25,645. Now, there may be some additional costs, such as doing mold remediation or fixing some things that need to be fixed, but I think overall, you're probably looking at a $30,000 or so investment to get into this property and hopefully make 13.6% cash-on-cash return. So I'm going to go ahead and conclude this video here. If you guys stuck with me all the way through to the end, please be sure and hit the like button. And if you guys have any questions about anything that I said, about my methodology, or about anything that I discussed with regard to Roofstock or Roofstock's analysis of these different properties, please be sure to let me know in the comments below and ask me any questions that you have. I'll be happy to answer them. And also let me know if you want me to do any other breakdown videos, if you want me to do a multifamily property breakdown video on the Roofstock platform, let me know that as well, and I'll be happy to do that. Finally, like I said, if you guys do want to check out Roofstock and sign up for a free account, you can do so with my link in the description below. But with that said, thanks again for watching, have a great day, and I will see you in the next one. Take care.